just walk you through what the truncated last week looked like, Nikunj. While you were away, we did, well, actually quite well. We managed to eke out a solid gain, managed to almost touch that 17,600 print. No major positive cues. The positive bias, though, in the markets continues. Overnight, of course, or rather over the weekend, you've seen strong US jobs data. The unemployment has fallen. Russia has said that it's going to be cutting oil output by about almost 700,000 barrels per day in the month of March, or rather, that's what's been accounted for. And for the week gone by, we managed to do pretty okay. The policy behind us on the brink of earnings season and not looking all that bad.
Yeah, you know, the lull and the dull phase, frankly, is over, if you ask me, both for Indian markets and for global markets. Globally, the news which was centered around US banking crisis, that has faded away. And locally, markets are no longer worried about what will happen to inflation and what will happen to Adani group of stocks. So in my book, there were three concerns. I'm just jotting them down in the morning, which were dragging Indian markets down. Valuations, which are not that extended. Inflation, well, the RBI, the fact that they've hit a pause button clearly means that the worst of the inflation print is behind us. And third, I would say flows, which were against us in the month of Jan and Feb and early March, that is also reversing. So the three concerns which were accounting for a large part of India's underperformance, they are getting addressed. And if those three concerns are getting addressed, will Indian markets now, rather than outperforming, be in line with global markets? I would say yes. So my view is, or our view is simple, that after weeks and months of underperformance, looks like Indian markets now could really be mapping the global mood point or the global market. If global markets are weak, of course, you will not outperform. But the underperformance, what has been the stark feature for this year and the annoying feature for this year, I think looks like that is behind us.
Yeah, even if you were to stack up how the emerging markets, or for that matter, our Asian peers have done as opposed to what we've done in the week gone by, in the last three trading sessions alone, we almost managed to eke out about almost 1.5% or so. China, 1.1% gain. Hong Kong was very minuscule at about a 0.3% downtick. Korea was down almost 0.7, and the MSCI Emerging Market Index as well fell in line by about almost 0.6%. So yes, definitely we were the region performers.
Yes, indeed we were. But just let's take stock, Aisha, of how the global markets shaped up. And yes, you did have Wall Street, which ended the holiday shortened trading week on a pretty okay note. We were in the green at least, and you had quite a bit of data as well that came in terms of the jobs report, a lot of earnings, non-farm payrolls weighted, and Asian markets, barring the Australian region, for now looking fairly robust. It's close to a gain plus when it comes to the Korean markets, for instance. The SGX Nifty, and of course we'll be looking at those adjusted levels largely on the back of the truncated week. And by the way, it's a 4-day trading week this week as well. So going by that, that's the print on the SGX Nifty. And it's going to be critical as well, Nikunj, because as there are a lot of holidays, there's equally important data that we're tracking. And it's big. You've got the numbers coming out, TCS, Infi. Who would have thought that we're back to talking about earnings already?
And this time, you know, Avan, we're approaching the earnings season with very diluted expectations. The market setup is such that nobody is really expecting anything large or anything very incremental from India Inc., at least for the quarter gone by. So the positioning of the market is often very important in understanding the short-term narrative. And if you understand the short-term narrative of the market, the short-term narrative is that expectations are low, and little bit of beat also could really generate upside momentum. This is an important week because if you will hear from TCS and Infosys, that is one sector where there are concerns. With HDFC Bank, since their quarterly update was already out, you pretty much know that which way things are moving for HDFC Bank per se, and the real big move will only happen once the merger process goes through. But TCS and Infosys, more than anything else, it's the commentary, it's the outlook, which in a sense would be crucial. So you add these three stocks, you're looking at least 15-16% of the weightage, and that is an important weightage considering that we are at the beginning of the earnings season. So that's part one of the story. Part two of the story, I guess, what will differentiate India now is what RBI did. They've hit a pause button. And they've hit a pause button, you know, more like Reserve Bank of India this time was able to pull out that April Fool card for everybody. everyone thought that they will increase rates, and here RBI comes out and say, look, we're not going to increase rates. That makes India very different. While other central bankers are increasing rates, India is the only large economy where the rates have hit a pause button. Incrementally, that's a big hurrah for banks, that's a big hurrah for NBFCs, that's a big hurrah for markets per se. Now, if all goes well on the macro front, interest rates technically have peaked out in India. And if they have peaked out in India, it really changed the narrative, at least on the inflation front, on the rate front, completely.
Yeah, absolutely. In fact, in the week gone by, you've already seen outperformance coming in from banks as well as NBFCs. The big question, of course, is whether that outperformance continues this week also or not.